Buckle up, because today we're going way back to 1896. You ready for this? We're diving into the Dow Jones Industrial Average. Yeah, the one and only Dow.
It's more than just an average, though, isn't it? It's almost like a financial time capsule. You could trace it back over a century and see how markets reacted to, well, everything.
So we're talking major history here, not just stock market stuff. Our listeners sent us a ton on this, by the way. But let's go back to the very beginning. 1896, Charles Dow, the Wall Street Journal guy, he kicks it all off, right?
He did, but the companies on that original index, you might not recognize them.
It's got to be different from the Apples and Amazons of today. So who were these pioneers?
Well, one was the American Cotton Oil Company. One of the original 12, actually.
American Cotton Oil Company. That doesn't exactly scream modern market, does it? What do they even do?
They're a great example of how the Dow and the companies on it have changed. American Cotton Oil, they actually became part of a company you definitely know, Unilever.
Hold on, Unilever. The soap and mayonnaise people. That Unilever.
Yep, that's the one. A far cry from cottonseed oil. Shows that being on the Dow isn't a guarantee you'll stay the same, or even stay on it.
That's wild. Okay, so we start with 12 companies back in 96. How did we get to the 30 we know today? Was there some big ceremony each time they added one?
More like a gradual realization. They figured out pretty early on that 12 companies couldn't really represent a whole country's growth. So in 28, just before the Great Depression hit, bam, they expanded it to 30. Been that way ever since.
30 companies, and they're supposed to represent the entire U.S. economy. That's a pretty big responsibility. How do they even choose who makes the cut?
Influence is key. These companies, they're like the starting lineup, showing you how healthy the market is. Or isn't, as the case may be. They're the trendsetters.
But even the cool kids change, right? Companies have their ups and downs, new ones pop up. What happens when a company gets kicked off the Dow? That's got to be rough.
It definitely doesn't feel good. It's not a lifetime membership, that's for sure. When a company starts to slip, or their whole industry fades away, they're out. Remember General Electric?
Vaguely, yeah. Big company.
Right. They were an original member of the Dow. Over a century on there. But 2018, gone.
No way. A whole century. They must have the record for the longest run, right?
They did, for the longest continuous run, yeah. But them getting removed? It was a sign of the times. Those old school industry giants, they weren't cutting it anymore. The Dow had to make room for the digital age.
Speaking of which, I was reading this article from S&P Global. Amazon joined the Dow this year, right?
Yep. And it's a pretty big deal. They replaced Walgreens. Shows you how much things have shifted towards e-commerce and Amazon's power in that world, obviously.
It's like the Dow's a living, breathing thing. It changes as our habits change. But how does it actually work, though? I always hear price-weighted index, and honestly, that just sounds confusing.
It's simpler than it sounds. Unlike other indexes that look at company size, the Dow's all about the stock price. Imagine a seesaw, and the heavier kid, the one with the pricier stock, they have more power over which way it goes.
So it's not about how big the company is, it's about how much its stock is worth. That's kind of a different way to look at it.
It is, and that's where things get interesting.
So a company like, say, Goldman Sachs, their stock's worth a good chunk of change, right? Way more than a share of Coke.
Right.
But Coke, they're everywhere. So even though Goldman Sachs might have a higher stock price?
You're getting at a big criticism of the Dow. It's that price-weighted system. Critics say it doesn't show the whole picture, especially with how growth stocks are doing.
It's like comparing a rare, super expensive bottle of wine to, like, a whole vineyard. The bottle might be worth a ton, but...
But it doesn't tell you how healthy the whole vineyard is, right? You got it. It's a limited perspective. But even with its quirks, the Dow's a big deal historically. It's been around for, what, almost 130 years? Seen it all?
Booms, busts, the works. Speaking of which, Black Monday, back in '87, I wasn't around for that, but wow.
October 19th, 1987. A day no one on Wall Street will forget. The Dow fell 22.61% in one day. Still gives investors the chills.
22% in one day? That's not a drop. That's like a crash. What caused that?
Oh, it was a bunch of things all at once. Program trading, the market was overvalued to begin with. Even just fear. It showed everyone how fragile things can be.
Yeah.
Even with safeguards in place, panic can take over.
It's wild how the Dow's not just some abstract thing. It reflects real events, you know? And those events affect all of us. It's not just the crashes either, like 9/11 or the pandemic more recently.
Yeah.
How did the Dow react to those?
Each one was different. After 9/11, when trading opened again, the Dow fell more than 7%. The world was in shock. No one knew what would happen. But within a few weeks, it had bounced back. Even ended the year higher than it started.
Wow. Talk about resilience. The market was basically saying, we got this.
Yeah.
Though the pandemic, that was a whole different story, right?
For sure. That was something else. First quarter of 2020, as the pandemic was hitting everywhere, the Dow had its worst quarter since, well, 1987, down almost 23%. Panic selling all over the world.
So a similar drop to Black Monday, but over a few months instead of one day. I bet that was terrifying for investors watching their money just disappear.
It was rough, absolutely. But then something interesting happened. The market came back. By the end of the year, it had not only recovered, but hit new highs. No one predicted that.
Incredible! Even a global pandemic couldn't keep the market down. What turned things around?
A bunch of factors came together. The government stimulus packages, the Federal Reserve stepping in to help, and then the vaccines, of course. All of that boosted confidence and, well, fueled the market's recovery.
It's like trying to predict the weather or something. So many things affect how the market's going to react. Global events, new technology, even just human nature.
Exactly. That's what makes it so fascinating to study. The market isn't some fixed thing. It's constantly changing.
Which brings us back to those criticisms we mentioned before. You sent over some research that was pretty skeptical of the Dow as a reliable indicator, actually.
All right. The Dow has its place, sure, but it's got limitations. A big one is that 30 companies can't really represent the entire U.S. stock market. There are thousands of companies out there, so many sectors. The Dow's just a tiny peak.
It's like saying you understand all of music because you've heard like 30 songs. You're missing out on a lot.
Exactly, that limited scope. It's a major problem for a lot of critics.
It's like trying to understand the entire internet by only looking at the most popular websites. You might stumble upon some gems, but you're missing out on the vast, intricate web that connects it all.
That's a great analogy. And it underscores why many investors and financial experts prefer broader indexes, like the S&P 500 or the Russell 3000. They cast a wider net, offering a more comprehensive and nuanced view of the overall market.
So if the Dow has these limitations, why is it still such a big deal? Why do we still hear about it constantly in the news and financial reports?
It's partly due to its long-standing history and familiarity. The Dow has been around for so long that it's become embedded in our collective financial awareness. When people hear the Dow is up or the Dow is down, it triggers an immediate, almost visceral reaction.
It's like a mental shortcut, even if we know it's not the whole picture.
Precisely. And let's not forget its symbolic significance. The Dow still holds weight as a general barometer of market sentiment, especially for those big established companies. While it's not the be-all and end-all, it can still provide valuable insights into market trends and investor confidence.
So it's less about relying on it as a precise measurement and more about understanding the broader narrative it tells about market moods and how those blue chip companies are performing.
Exactly. Think of it this way. You might check the temperature on your phone to get a general sense of the weather, but you wouldn't base your entire outfit choice on that alone. You'd look out the window, check the forecast, maybe even step outside to feel the air.
It's like the Dow gives you a quick temperature check for the market, but to really make informed decisions, you need more data points, different perspectives, a broader view.
That's a great way to put it, and that's a key takeaway from our deep dive today. By understanding the Dow's history, its strengths, and its limitations, we can interpret its movements with a healthy dose of skepticism and context. It's a single piece of a much larger, incredibly complex puzzle.
So for all our listeners out there who are now armed with this newfound Dow knowledge, what's the so what? How can they apply this understanding in a practical way?
The next time you see that Dow number flashing across your screen, remember that it's more than just a number. It reflects the ebb and flow of the U.S. economy, the successes and struggles of major companies, and the collective emotions that drive market decisions. It's a story told in numbers, and now you have a better understanding of how to read it.
It's like having a secret decoder ring for deciphering the market's whispers. And speaking of deciphering, you left us with a thought-provoking challenge. If we could create a new, improved Dow Jones Industrial Average today, what would it look like?
It's a fascinating thought experiment, isn't it? Which 30 companies truly represent the innovations, the challenges, and the potential of the 21st century economy. And what would their inclusion tell us about the future of the market and the world beyond?
It's like assembling an all-star team for the future of industry. Food for thought for all our listeners out there. So as we wrap up this deep dive into the Dow, remember, knowledge is power. And with a little historical context and a critical eye, you can navigate the complexities of the market with confidence. Until next time, keep exploring, keep questioning, and keep diving deep into the fascinating world around us.